Okay, let's do our precious metals update. I would say definitely, I mean, we had an eventful day, to say the least, right? Now, does that mean we have a long-term low in place? Not necessarily, right? The jury is still out, but that's why we have levels. It's math. So like, I want us to, I would ask people to kind of temper their expectations. It's okay to to get excited, but let's make sure we're being as objective as possible and actually watching the levels versus letting that emotion kind of overcome you. So again, welcome to the Swing Trading with Cycles channel. We time the markets here without predicting the markets. We time the markets without predicting them, and that's because we understand how to analyze a trend. And because of that, we're able to recognize trend reversals. We're able to see when a downtrend ends and becomes an uptrend, and when an uptrend ends and becomes a downtrend. That gives you signals, right? If you're early in an uptrend, that's when you go long. If you're early in a downtrend, that's when you either exit your position, or if you're really aggressive, you even go short. And so, if you're not familiar with the cycles, definitely take a look at the take a look at the link in the description for pretty comprehensive Cycles 101 content. I'm going to assume that you've already seen that you're familiar with those, the daily cycle high, daily cycle low, etc. So I'll proceed assuming that we've already you're already kind of familiar with that. And so we will start with the daily chart of gold, and we appear to, and I always say this, I encourage people not to get too hung up on like the specific counts. You want to focus on the price. I should say, I focus more on the price action, the structure. Do we have a swing low in place? Okay, where would we place a stop? Where do we need to get to make a higher high? The numbers, the counts, that's secondary, right? That's a shorthand for the price action analysis, for the trend analysis. That's the way to think about it. Stock market cycle analysis isn't necessarily just about counting. Like, it's really actually about understanding the trend and then using those numbers in your advantage. So we have what would be a daily cycle low or short-term low. Most importantly, it's a swing low, and it's actually a bullish outside candle. We talked about this in our last update. As always, take a look at the links in the description to see the previous videos about precious metals and also other asset classes. And so this is day 5 that's just starting today, and right, today is also October 3rd. So it's Monday night. We'll see if we get follow through Tuesday, or we either get followed through, a reversal, or consolidation. At this very moment, it's more consolidation. This candle opened about 3 hours ago, and so far we're just kind of consolidating at the upper end of the range after this kind of massive daily candle, which was followed by this massive daily candle, which was, as I mentioned, a bullish outside candle. And then we had these 2 days of kind of consolidation. Really ugly. I mean, this is a pretty ugly candle. Hard to stay long there. So possibly really early in a new daily cycle, which is exciting, right, for gold. Again, the big question for gold is always, or it will continue to be, where are we in that longer term cycle? In the case of gold, that is the 8-year cycle. Call it 7 to 8 years, right? If it's a 7-year cycle, it's about 84 months. If it's an 8-year cycle, it's 96 months. And so if we think about where we are there, I'll look at the monthly chart as we're on that subject. So it is incredibly early, right? We only have 1 day of the month. So this green monthly candle is really just this Monday candle where we just had, again, nice bullish action. Really, really super early, though. What we do know is we need to get above 1735 to make a monthly swing low. And so that's one of the most important concepts in this channel, that idea of a swing low. A swing low is what starts a rally. A swing high is what ends a rally and begins a downtrend. And so this is a monthly chart. And so if we can get a monthly swing low, that's a very, very big signal. Here's an example of a monthly swing low, right? We crossed, I'll zoom in here, right? So we crossed above the low from this candle that marks the high from this downtrend, right? And then we got big bullish follow through. So 2 nice months. So this was April and then May of 2021. Then we got rejection, consolidation, and then we actually moved higher for a bit. This was your sort of war-fueled rally, and then the bottom really fell out. We swept all these lows, and now as I said on Twitter, it's really a question of, is this month 82 and we're continuing the 8-year cycle decline? We're going to get a lower high, right? And I'll just kind of spell that out, right? Like, are we going to see something like this, right? On our way maybe to like 1400, 1450 area? Or is this going to become our 8-year cycle low on month 81? That could happen. Again, these things don't have to happen exactly on the month that, ago. It has to be 84 months, or it has to be 96. Absolutely not. That's the other reason why it's so important to focus on the price action. Do we have a swing low? Yes. We don't have a swing low here, but I'm saying check. You want to make sure that it's checking the boxes. Is there a swing low in place? Where would my stops be placed? Where do I need to see another higher high? And if we look at the weekly chart, this is where things get interesting, right? So we had that looked like a very clear weekly cycle low at week 31. And then we had this rally that looked convincing in real time, but it petered out on week 3. And then we continued to drop into a week 10 low. Failed weekly cycle, theoretically, right? Because we went below this low, which is already below this low here, right? Now we got this big bullish weekly swing low. Again, I don't want to belabor the point, but like this is arguably one of the most important concepts, right? We went above the high of this candle that marks the low. And so now we have a weekly swing low on the board. It's just Monday. We have 4 more days of trading, so this thing could get violently reversed, right? This candle could start to build an upper wick. And that's another thing that you want to be aware of. We're opening the week here at 1660. So we really want to stay above that level, or this candle goes red, which is bad news bears. That's one of your relatively early signals that things are not looking good. And I'll also say, maybe this is not your weekly cycle low and this was your weekly cycle low. And so then it doesn't really matter, right? We know what we're looking for is confirmation of a swing low, and we're looking for that swing low to cascade to the higher time frame, in this case to the monthly chart. And that's what we're going to be looking for. And so again, the stakes are super high here. We either just printed an 8-year cycle low, or we're still declining into it, which means we would expect a lower high and another leg lower. So either way, we're either going to continue a massive trending move higher, or we're going to get a higher low that's going to give us more downside. Either way you look at it, there's a way to make money off of that. But more importantly, you'll know by looking at the price chart, by looking at the key levels. And of course, we'll be giving regular updates on this channel. If you haven't subscribed, please do that. It'll ensure that you're getting like timely updates, because I tend to release these videos as things happen. I definitely try to get a video out at least once a week, but I definitely try to put videos out that are like, that are more timely as soon as a move happens. Speaking of a move, I mean, my God, look at this candle from silver, right? This is like an 8% update. Let's see. What was that? Oh, right. I think at one point when I looked at it, it was like something like 8%. I tend to not even look at percentages up anymore as much, but because I focus more on the actual structure of the chart. But here's the important thing here for silver, daily chart. We talked about this in our previous videos. We had this big bullish candle on day 7, and then we just consolidated, right? We consolidated inside the range of that candle, right? So that candle had a range of from $18.80 to $20, so a $1.20 range. We consolidated inside it, and then we broke down below it, and then we reversed violently. What is this called? It's a fake breakdown, a false breakdown. Same idea. It's also a bullish outside bar. This whole candle becomes an outside candle of all this stuff, all this consolidation. Here's the rub, though. This is a relatively late weekly daily cycle move. We're now on day 23. And so, I mean, this is the only kind of fly in the ointment, is you would expect that we're going to start our daily cycle decline soon. Notice the previous daily cycle topped out on day 22, the one before that on day 16, the one before that on day 14, the one before that on day 23, the one before that on day 26. And we had this one here, that was back in November 2021, that topped out on day 34. I hope you're noticing a pattern there. We tend to get our daily cycle low in like Day 23 tends to be kind of late for not having a daily cycle high already. Excuse me, not daily cycle low. So that's important to understand. When you see a big bullish move, you want to be aware of where you are in the cycle. And there's nothing mystical about that. It's not necessarily the number itself. It's really just a question of like, how long have we been rallying, right? And if we've been rallying for a certain amount of time, you would expect at some point we're going to get a pullback because that's how price moves, right? In an uptrend, we have higher highs and higher lows. So at some point, after you're making a higher high, you're going to need to make a higher low. Same thing with a downtrend. If a price is moving down into a low, it's not going to do that in a straight line. It's going to make lower lows and then lower highs. Those lower highs are bounces that people often chase and get crushed on. So this could become a lower high of all this stuff, right? And then move lower. We're going to have to see. So far, it is blasted through this zone. And here's the thing. I hope this is obvious. We're really going to want to hold this area, this line here. And I say not the line, but the area, right? Because notice what happened with this, right? We clearly went way below the line. We closed below it a few days. But then we popped back up, kind of like a beach ball trying to be held down. So don't focus so much on like that one point in time. That's a big mistake. You want to think about zones. Are we able to stay relatively above this $20-ish level? And that's why you don't have to chase these things. Don't ever let anyone tell you you're going to miss the bus. That is BS. That's a crock of that's a load of crap. Price moves in price trends, which means if it's going higher, you're going to get a higher low at some point. So you don't have to chase it. And so after this huge move, you'd expect it's going to take some time to digest. I mean, think about how much time it took to digest this move. And this was nowhere near as big as this one, right? So that's important. You don't need to chase it. The other thing I will say is that you should get more excited about the pullback than the rally, because here's what we want to see, right? Just being super clear here. We've come up here. We did this. Now we did this. We really want to ideally hold like here and then keep moving higher. But again, this is just a zone. You could see a world where we dip below, and that's fine, and then keep moving higher. That's what you're going to want to kind of watch for. But again, it's already day 23, so we're getting late in the daily cycle. But what do we look like on the weekly cycle? So it is week 5 of the current weekly cycle. We had our weekly cycle low on August 29th. And then we had this vicious back test. Almost made a new low. I mean, look at this candle. Almost made a new low. That's that spike down below that consolidation zone on the daily chart. And now we've popped back up. We've made a new high on the weekly cycle. Here's the thing that you want to be really, really aware of. The weekly cycle before this one topped out on week 6. The one before that on week 7. The one before that also on week 7. So for the last 3 weekly cycles, that's literally going back to early 2021, we've only been able to rally a maximum of 7 weeks before starting the weekly cycle decline. So since we're on week 5 already, it's obviously super early. It's only Monday night. This is critical, right? Because we're either going to start the decline for this weekly cycle early, the way we have for the past 3, or we're going to buck the trend and we're going to get a high past week 7, let's say, and that could get really interesting, right? And so, again, as we're getting this little pullback on the daily, if we see the pullback and the daily pullback and hold a higher low, that's a great sort of risk. That's a great way to kind of manage your risk, to understand, okay, are we going to get some resistance when we get around week 7, like just not able to put together a long enough rally? Versus, let's say we do push through that and maybe even, pull back, get a higher low. That is your signal like, oh, maybe we're going to get a 19-week rally like this one, or a 20-week rally like this most bullish cycle. I mean, this is the cycle that everyone is waiting for. This one that came out of COVID, this cycle lasted 27 weeks. It had a high on week 20. That is a bullish cycle. A 20-week rally and only a 7-week pullback. Now, obviously, this led to this drooping, this 2-year consolidation / move lower. So that's not awesome. But this is the kind of thing that we're looking for. I mean, except you want to sell in this area kind of right here versus getting caught up in this. But very exciting here. And on the monthly chart, Super important. I tweeted about this. We have a new high on the monthly chart. This is kind of like what I was talking about with gold, just to be like super clear. This is a swing low right now. This is right now a swing low, right? Because we've gone above the high for this candle that marks the low. Now, what we haven't done yet, though, is gotten past this consolidation zone. Like you see this this next line, because this line marks the high from August, right? And we really need to get above there, like, you know, to actually start to challenge these highs here and try to get back into this zone. So that gives you a level to look for, like, you know, around that $21 area, which we're obviously super close to. And you can see we even almost kissed it and pulled back. And so, again, we're going to want to watch this pullback. As I keep saying, get excited about the pullback, because that tells you a lot more than the rally. Because if the pullback can't hold a higher low, that tells you everything you need to know. You shouldn't be as excited about the rally. And finally, GDX made a daily cycle low on day 44, which was September 26th. This is day 5, starting to look like a nice clean trend. I'll get rid of this actually, so that doesn't belong there. That's our next level that we're really looking for, that 25.72. If we got up there and then pulled back, that would make this a double top. That's your real level that you want to see us kind of get through. I mean, what we're looking for, you know, maybe something like, you know, we base below that and then we back test it from above, right? And then we're off to the races. I'm not saying this is what I expect is going to happen. This would be your bull case. And, you know, if you start to see something like this, this would be an area to maybe go long. Like, okay, well, we're above here now, right? I mean, it depends on your style, obviously. There are going to be lower time frame signals as well. So that's your daily chart. And interestingly enough for GDX, this appears to be week 1 of the weekly cycle, because we did make a big new low last week, and then we closed as a bullish outside candle. So that's really interesting in that, you know, it's not quite the same count as silver, which the two have been kind of tracking each other. So we're going to want to keep watching that as well. I marked this area on the weekly chart because I suspect if we get down into this area again, we could see a rapid move down to the COVID lows. As you can see, we actually poked into this area and then sprung back up. That is, I hope you're seeing it, right? That's a false breakdown. It's a false breakdown, a fake breakdown, whatever you want to call that. Price rejected this level, rejected these lows, and then moved higher. Doesn't mean we can't make a lower high and then continue the move lower. But as of right now, like, this was your clue, like poking below this area and then springing back up was a very powerful clue. Monthly chart levels are important. It's just an inside month so far. We need to get above the high from last month, which is 25.71, which, not a coincidence, coincides with that potential double top level on the daily chart. That's how multiple time frame analysis works. Also want to be aware, this candle, its opening price was $24.50. Really important concept. This is your monthly candle. If we were to make a move below $24.50, that would be us going red on the monthly chart, and that's a really bad sign. That tells you maybe this was your green month, your sort of lower high, and we're just going to continue the move lower. So that's a really important concept to think about across all time frames, really. Understand what the opening price is, and if we move below that opening price, candle goes red, that's a big blinking red light, no pun intended, that, you know, things might be getting bearish here. And before we close out, I will look at the Dixie. And the most important thing for the Dixie, I'll start with the monthly chart really quickly, is to be aware of that 3-year cycle, 3 years, 36 months. We're on month 21 right now in October. So that potentially makes month 20, so month 20 is our high so far, and this is an inside month. It's a pretty big range that we're working inside, right? Like we can kind of chop inside this range. So basically from around 114.77 to 107.50. I mean, that's an enormous range, especially for a currency. And what's happening here is we're getting our daily cycle low, right? And this candle just started trading at 8 p.m. is when the Dixie chart starts trading. It's day 15, is it? Let's see, 11, 12, 13. Yeah. So day 15, you can see we've had a top on day 11 already. That's pretty early for a top. Yet at the same time, this was a pretty early daily cycle low. I know some other analysts are calling this a half cycle low. It doesn't really matter. What we do know is we have a daily swing high on the board. And if we look at the weekly chart, it is threatening to become a weekly swing high, making week 17 our potential ICH or weekly cycle high. So that's important to watch. And I think the other thing to really pay attention to is, does the dollar hold a higher low on this pullback? As I keep saying, the pullback is more important than the rally. We're going to want to know about that. The last thing I'll say actually is about silver. Another really important thing is that this is one of the longer sort of rallies we've had on the daily cycle. And so that's also important to note, right? The longer the rallies get on the lower time frames, theoretically, the longer the rallies can get on the higher time frames. You kind of need those to work together. So definitely some interesting action here. Again, this pullback to me is really exciting to see if it holds a higher low. This is a chance for folks to kind of get in, again, depending on what price does. So that's our lay of the land.